Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. Wow, what an impressive day was the case yesterday to start June off with a bang. Today is the second day of June 2011. It is Thursday. It's about midday, about noon Eastern time. And looking at some really crazy impressive gains. As a matter of fact, if you look at your screen right there, you're looking at 118.8% for our new leader, the MSAUDT of our primary portfolios. MSAUDT up 120%. The Delta DTS now in number two. The number two spot coming in at a paltry 115.8%. Now, is this lifetime? Is this for the year? Is this maybe, wow, 6, 9 months, 3 quarters? No, this is just for 86 days. We're going to point to it right there. 86 trading days. Now, that's about 4 months or so. So in 4 months, 120% nearly for the MSAUDT, 115% for the Delta DTS, which the new Delta DTS went through a little bit of reallocation, if you will, to begin of the year. Wow, has it been crazy. What's even more interesting, we're going to get to the market promise in a second, but these gains are just simply astounding and must be exemplified. And what's interesting is if you look at the Delta DTS, it is a $15,000 portfolio. So this Delta DTS trades 9, maybe 10 lots across maybe 5, 7 or 8 systems. Don't know exactly. But the Delta DTS at that rate, let's just say for a round number, 10 lots, $5,000 in margin is all you need to trade the portfolio. We would recommend at least having a $5,000 cushion. The average drawdown is probably maybe half of the $15,000 allotment, so $7,500. I would have to check on that, but let's just say the average drawdown is $5,000. If you start with $10,000, you have $5,000 in wiggle room for an average drawdown, assuming you don't start off making money right off the way. Whereas had you started 86 days ago, obviously you'd be up over 100% or so for the Delta DTS portfolio. But not to take away from the MSAUDT, an astounding gain of 118%, and this is of course due to yesterday's impressive gains, 54.4%. There you see it right there. It is just a $10,000 portfolio, $5,400 it made yesterday. And I promise we're going to get to look at the market, but it's as we've mentioned oftentimes in this space over these airwaves that 80% of our profits are made on 20% of the trading days. Sometimes 90% of the profits are made on just 10% of the trading days. So you really have to be around to take advantage of these opportunities. And lo and behold, bam, you get a 54% return in a single session. Now, what's more interesting is the market was down, what, a couple of percent yesterday? So it actually bested the market by, let's say, 56%. Throw in an extra 2%. If the benchmark were to be, say, the S&P 500 or the U.S. stock market in general. Most were down a couple of percent yesterday on the rather impressive break. Now, we're going to look at the market as promised. We're going to switch over right there and look at the market. Not quite yet look at the daily, but the daily is interesting. In fact, we can go back and look, let's see, where were we? We can look at, well, that's where we were. Maybe right here. Yes, so this was our last video, and what did we mention? That we were bearish on the market. There we go. Current market bias right there in last week's video for Friday, the 27th day of May. Today's, of course, second day of June. Current market bias bearish below 1340 to 1350. Last print of 3150 in the market. There's the Q Trader getting third over the last quarter. Not sure how they rank that out of 500 or so portfolios on Strategy Exchange. We're going to look at that in a second. Also, just have so much to share today. But we're going to look back over at the daily charts. We're going to switch back to this. Take a quick look at the intraday setups. Wow, a little bit of a fall through today. Beautiful setups that we've seen. The complete negation tried to break down as a fake out breakdown of the market. Came right back up to the underside of the trend. You can see right there, midday or early session. and has just gone right back to the downside. This daily chart of the E-mini S&P 500 futures contract, front month in nature, and as you can see, our intraday dynamics are all over the place. We actually had some bullish indications this morning, so this would have been a good buy setup right here, but just was really wanting to stay on the sidelines given the impressive range yesterday. Weren't wanting to catch a falling knife, and that's what we avoided, and at least on a discretionary basis, and quickly back to the bearish side, and especially back below this low right here, the late session yesterday. So below this low, 1310.50, we'll call it, the market is certainly bearish here once again, and certainly down another 4 points after yesterday's 30-point drop. Love seeing those ranges of 30 points, especially to the downside, because it really makes people wake up and take notice that you've got to hedge your portfolios. If you had $1 million portfolio, you lost 20 grand yesterday. You lost 20 grand yesterday. If you had $1 million portfolio, you lost 20 grand. But if you hedged with 10 to 20% of that $1 million portfolio, you've got a $100,000 portfolio with us at least. And the Matt Black, we'll look at in a second, made 20 grand, made 19,600 some odd dollars yesterday. So it's very important to hedge with alternative investments, risk speculative investments, to be a part of any well-rounded portfolio. If you have $1 million, you've got some in stocks, you've got some in bonds, you've got some in real estate, you've got some in cash, and you have 10 to 20% in what we do, risk speculation, to essentially hedge your portfolio, most notably on the downside. I mean, we get an influx of business, certainly when we see days like we saw yesterday, and unfortunately, a lot of those people are coming in after the fact. Hey, oh, whoa, I lost $20,000 yesterday. Could have made $20,000 had 10% of my portfolio with the MiniAnalyst.com. So back to looking at the market as far as a free informational trade. Definitely want to be shorting this market from 8 to 10 or so. If we get above 1250, might be looking at the buy side. But, we could get some pretty impressive short covering if the market tries to move higher, but the sell side is definitely the preference. We're below the late session lows of yesterday. We're below the early session lows of today. The trend has been a beautiful retest, and we're simply retracing into that trend with all of our dynamics suggesting that the bears are in control. Now, having said that, we're going to go ahead and minimize. Look at the... Here's a daily chart of the S&P 500 market, and before we look at that, look at this. I just happened to catch this out of the corner of my eye. What a beautiful trade for the day trader 26.0. Doesn't really trade that often. If you scroll back, hardly ever trades, but man, when it trades big. And Black actually has 2 lots in this portfolio. Black meaning the Matt Black portfolio. Black certainly means in the money. Red means not in the money, and that's hopefully the intentions of the Black portfolio. Our most diversified portfolio, $100,000 portfolio. We're going to go ahead and minimize that and look at a chart of the daily market. There we go. And as mentioned last week, just a few days ago, late last week, it's holiday shortened week this week due to the Memorial Day holiday. We were bearish below 1340, 1330, and actually mentioned that we were just simply at the upper side of this trending lower channel. And lo and behold, we get up there, the market closes there, and boom, they sell it hard to the downside on Wednesday. In an impressive move and falling through a bit to the downside as well. But we are, kind of still in this trading channel right here, so the market can still fall through on this predominantly bullish formation longer term, but the short term has certainly been to the downside. As you can see, if we were to draw a trend line there, which is certainly possible, we're just going to converge with this. So 1300 is a pretty impressive level of support. And you actually have this swing point low at 1295, so definitely want to be taking some profits off the table at 1295 to 1300 in the cash market, as that is some a confluence of some pretty impressive support. But again, below 1330 to 1340, we remain bearish. And so some pretty good opportunities there to get in, or have we, I should say, looking over it, we're going to pull up once again. There's the MAP DT making $8,880 yesterday. It's a $20,000 portfolio. $8,800. We're going to go ahead and look over at how we did yesterday. So there's the black making 20% yesterday, $100,000 portfolio. Again, we recommend 10 to 20% of your portfolio, total portfolio, be devoted towards risk speculative investments, such as our own, particularly to hedge when we have these big down days like we had yesterday. And there you see 54.4%. MABDT coming in with an astonishing 44.4%. Delta DTS with a paltry 37%. Now, of course, most portfolios would be happy with 20% returns per annum. I mean, that's really the target. Certainly, you have to limit risk and take into the consideration the reward to risk. And we do have risk. We have 50, 60, 70, 100% drawdowns in these portfolios. So, again, they have to be risk capital. But as you can see, overall, you have to make money. And there you go, 120% for the MSA UDT. Now, you can actually subscribe to these. Very easy, simple setup. Just go to the website. And you can subscribe to the MSA UDT right there. There's the Delta DTS. Just click on those. Add to cart. And there you go. We're going to have to update that. Go ahead and add to cart. $7.88 for 3 months. Again, trades about 10 lots. $7.88 for 3 months for the Delta DTS. So over the last 3 months or so, we're going to go back over here. $788 essentially is the fee to make $11,880. So when you put that into perspective, quite insignificant fee for the amount of reward that you are receiving with the MSA. Actually, that's the Delta DTS. The MSA UDT is right over here. Where were we? Right there. Go back and look at that. So 788 is the Delta DTS. 588. The MSA UDT. 6 portfolios. 6. That's not even $100 for $100 for 3 months of trading per lot. Which is pretty impressive. Not even $100, so you're looking at $30 a month per system, essentially. So pretty impressive bang for the buck, if you will. But we got a lot to cover. There's the MABDT making 88.80, MSA UDT making 54.40 yesterday, as you can see. 55.20 for the Delta DTS right there, and there's you see the Matt Black making 19,622. Not even trading the mid cap. Actually, I think the mid cap has 2 systems. One was long and one was short, so they were perfectly hedged. And we're going to look right here. This was 5.11 a couple of weeks ago. Delta DTS 80. They were battling it out. MSA UDT battling it out about 85%, and they're still battling it out. So really, either one, they've really shown their relative strength amongst the other portfolios. As you can see, as they've jumped from everyone else is hanging around 80%, and they're up 120%. But did want to mention we did show the right there the Q Trader on Strategy Exchange, Strategy Runner's website, coming in with 32% return in April. 57% return over that quarter, and lifetime 243%, max drawdown at 86%. So we just got to thinking that this portfolio of 7 or 8 systems. But if you go to Strategy Exchange's website, they've got individual systems, and so we kind of broke out and are now offering an individual system. We're going to kind of test this out, just an individual system. Swing System 5.00075. If you go to Strategy Exchange, that's with an X, no E, Strategy Exchange, you can view the leaderboard, essentially. Now, they've also factored in $3 per side and the fees of the portfolios. So they've deducted these from these returns. And what you have is, if you go to Strategy Exchange's website, for instance, we can just Google Strategy Exchange, and I guess I should have typed it correctly. And we'll go to, just Google that and go to the quotes one, and you can click there. And this is what you see. MiniAnalyst right at the top. Why is MiniAnalyst at the top? Well, that's because the Swing System 5.00075, when broken out of the portfolios into an individual system, this is how it's performed over the last couple of years, or over the last couple of years, or however long, since 2009, March 2nd, 2009. And but you can see this is the leaderboard. Swing System 5, and here's another version down here. So we're now we just got tired of not being on the leaderboard and seeing these great companies, to which we can certainly attest to Systematic Signals, highly respected firm. Don't know too much about Natural Solutions, but they do have, looks like, some good portfolios. But they were on the leaderboard, so we needed to be on the leaderboard as well. Now, of course, the leaderboard is ranked by P&L percentage, and as you can see, 1,328%, 592% lifetime, 548% annualized profit of 591%. So our annualized profit is the lifetime profit of the next number 2 spot. But we really can't read too much into this because this capital needs to actually change, because this is going to go to, this is actually a $10,000 portfolio, so you're going to need probably $10,000 to trade this swing system 50075. But it's only a couple $100. Now, of course, if you come to our website and you subscribe to one of our portfolios, you're going to get 7 systems that are, again, equate to essentially $33 a month. But if you just want a single system, there you can have it for a couple $100 a month. It is leading on Strategy Runner's website, right there, as you can see, and there's the equity curve for the portfolio. But so these numbers are going to be halved. This number will become, since this is going to be 10,000, the percentages, I should say, will be halved. This will become about 650%, 674%, or what have you. Still besting, still going to be atop the leaderboard, 674%. And this will certainly be halved to an annualized of 300%, still besting. But most importantly, this number will go down to about 175% or so, to essentially be below. There you see some max drawdowns, 220% or whatever, 175%, and that's risky. We do have a now that's not the average drawdown, that's the maximum that the portfolio maximum drawdown that it's seen. So this will read 10,000 and 675% or what have you, and 175%. For the return. This will read about 300% on an annualized basis, and the risk reward will still remain the same, 3.8, which is a very enviable reward to risk. Now, we might break out some other systems, but generally we do prefer portfolios. But again, we're tired of not being on top of the leaderboard, or certainly on the leaderboard. And there you have it. So the Mini Analyst, you can take advantage of just that system, or you can come to the website, subscribe to several systems, and get some more diversification and some more bang for your buck. So if you guys have any questions, go to the website. Click on Ask an Analyst. If you have any questions about the market or a stock or some futures or whatever you have, you can ask an analyst or chat with the support team live. Hope you enjoyed the update. Sorry it went over a bit, but we did have a lot to share given the impressive gains that we've seen. So we will see you next time.